Hey, what's going on, everyone? Welcome back to my channel where we talk all things real estate. You saw the title. Obviously, you're here because you are interested in learning about private lending and how this can assist you as a wholesaler, not only make more money, but also teach you some things about the market and how to, build your book of business. So let's just jump right into it. What is private lending? So pretty much what private lending is, it's just like institutional money, right? Like the Bank of America's, like the credit unions, but they're not associated with those entities at all. This is private, right? So this could be made up of, let's say, dentist office, a lawyer's office, family owned, maybe a wealthy individual who they pull their money together, their capital together, and they lend it to companies like this for them to lend out so they could make a return on their money. Maybe even privately held insurance companies will pull their money in as well for these companies to kind of go out and make loans, right? So typically with private money, these loans are going to be made to investors. So these aren't going to be like your traditional banks or credit unions who lend on personal homesteads for families looking to buy a home to live in. These properties are going to pretty much be investment properties. And what I mean by investment properties, so new construction. So if you are a builder and you're building, anywhere between 1 to 4 units, maybe a little bit more, and your plan is to sell or maybe build to rent, you would be a target for them. If you're a fixing flipper, right, you're just buying, rehabbing, getting out, buy and hold. These pretty much are going to be the ideal customer client for these companies. And it's important for you to build relationships with these companies as a wholesaler because if you not only can find the deals and you have relationships with these different companies and you can kind of quote out terms while you're sending out your deals and maybe put a ROFR, which is a right of first refusal, on your deal to say, hey, look, let me assist you in securing the new construction loan or the fix and flip loan or refinancing out of your existing fix and flip loan into long-term perm debt. So you're able to maybe charge 1.5 to even 2%, depending on the size of the deal. So you can potentially take, if you're making three, five, $10,000 for your assignment fee on a deal, you can potentially charge, an extra 2% and turn that $10,000 deal, that $5,000 deal into maybe a 15 to now $20,000 deal, depending on the scope of work on the project that your client is doing. So that's why it's really good to, if you want to become a one-stop shop, right? So you're learning the market, right? You're showing that these investors that you're not just some Joe Schmo who went down a YouTube rabbit hole and just started making offers on deals. You take your job very seriously. This is what how you need to look on the back end as a wholesaler because these are what your clients are thinking about when they're penciling out a deal that you send them. So, I mean, obviously, you want to know what's going to be required, right, to get approved. And if you're a seasoned fix and flipper, or you're a builder, or you've worked with somebody in the industry in the past, you definitely understand when it comes to getting approved. Private lending companies are going to vet the borrower based on these four things, right? It's going to be credit, liquidity, experience, and the project feasibility. So if we're starting with credit, the reason why they take a look at your credit is because it's going to affect your rate, it's going to affect your leverage, all of that. And obviously, the rate and the leverage is important because that's going to, um, affect your profits on the back end once you sell or once you refinance out. All that, all that's going to play a role of your liquidity. So they're going to take a look at your bank statements. The good thing is if you have personal bank statements, business bank statements, you have brokerage accounts, you have any stock portfolios and stuff like that, they will take all that into account just to make sure that you are liquid and you have the funds to make your payments, right? Because typically these are going to be short-term loans, interest only, no prepayment penalties. That's pretty much what you're going to see, right? So moving on, experience. That's going to be very important, right? And that's going to either help you or hurt you in terms of your leverage and your rate. So when they're putting the credit and the experience together, let's say if you have a 800 credit score with 6 builds over the past year, right? You entered and exited 6 new constructions, right? Or if you've done 15 flips over the past 2 years with an 800 credit score, more than likely you will get the best leverage, right? Assuming that you've already maybe done some deals with this lender in the past, or even if you're brand new, they will definitely try to be competitive to win your business. So if you know something like that, when you're talking to these investors, when you're trying to, flip them a deal, whether if you're a land dude like me, where you're only looking for land and you build a book of business with builders, or if you're finding off market single family residential homes and you're, flipping to fix and flip investors, it's very important for you to be able to kind of speak this language because ultimately, like I said, it's going to separate you. They're going to know that, okay, you take this very seriously. And who knows, even if you don't have a deal, they may give you a ring on something that they have and ask you to, hey, can you help me, secure financing? Because a lot of times these guys are very busy. Guys and girls are very busy. So they might not have time to sit on the phone with the loan officer going over each and every detail, et cetera, et cetera, et cetera. That's where you come in, right? And then ultimately, it's going to be project feasibility, right? So, does the project you're trying to do make sense? If you're doing a fix and flip and you're saying, hey, look, I can rehab this for 20,000 and I can sell it for 1 million, right? And they go take a look at the MLS or Redfin, Realtor.com, whatever, and they're seeing that the comps are showing 600K. That doesn't make sense. So they might go back to the drawing board with you and ask, like, what evidence do you have to explain why you think your exit price is going to be that, right? So these are all things that they're going to ask you, and for you to know this, on the front end when you're looking for deals, this can help you out tremendously when you're promoting your deals, when you're marketing your deals to your end buyers. So some other things that's going to be needed. I explained earlier that these companies, they're lending to investors, right? So this is going to be essentially like a business loan, right? You would need to own some type of corporation or an LLC. Typically, you see a lot of LLCs in this business. So they're going to need that business entity information. So your certificate of formation, your IRS EIN number, your operating agreement, all that's going to be needed for them to end up actually closing the loan for you. Obviously, you're going to have to fill out a loan application and a driver's license. So yes, they will do credit checks. Some companies are different. They may do 2 a year, some one. Some may be a soft pull, hard pull. It's just kind of going to be depending on the company itself. But a credit check is going to be needed. There's no way around it. You know what I mean? Like that's how they verify, right? If you're giving them information up front saying, I do have this credit score, this, that, whatever, that's great. But as you know, in this industry, trust but verify. That's going to be something that's going to be similar across the board, no matter what private lending company you go with. Typically, they're going to need a renovation budget if you're fixing flipper, or if you're a new construction guy, a construction budget. So for this number 4, this is going to be pretty much geared toward new construction. So if you are planning on building and selling something, they're going to need architectural plans from you. They're going to need a survey, and whoever, if you're the GC yourself or you hired a GC, maybe some type of resume put together with a website, how addresses of previous properties that's built and sold, just to kind of, show that you know what you're doing, right? And then ultimately, not every company requires, but most require an appraiser. So this can either be an appraiser, like you hire an appraiser and send them out to the site, or you could probably get a desktop appraisal done. It's just kind of going to be depending on a per deal basis. But it's important that as a builder, you have all this information because the appraiser is going to go off of your architectural plans, how in depth your budget is, and ultimately, the comps surrounding it. So you want to give the appraiser everything that he would need to give you a strong appraisal, because this is a subject to. So when you're doing new construction, it's going to be, hey, I want an appraisal subject to this is what I'm building, right? Subject to these architectural plans, this budget with these finishes, with this type of equipment and stuff like that. What do you believe the value is going to be, right? So these are all things that's going to be required when you go out and you're trying to secure these loans. So just to kind of put everything together for you, like I explained, as a wholesaler, you want to have relationships with these companies to kind of put you in a position to make more money on your deals, and to potentially, if you don't have a deal, like I mentioned, somebody, a builder may call you, or a fix and flipper may call you and say, hey, look, I need to get this loan closed within the next 30 days. I need to get this loan closed within the next 14 days. Do you have any lenders in mind who can get this done? And then boom, you have a book of business. Hey, let me call this person. Well, before I call them, do you have this on hand? Do you have your entity docs on hand? Do you have your bank statements on hand? Are you prepared to fill out a loan application right now if the numbers work for you? That's all something that you can discuss with them, right? Picture of driver's license. Do you have a budget? Can we go over your budget? Do you have a resume? And sometimes you can even put the resume together just based off asking them certain questions. Do you have a HUD settlement statement to prove that you either built these 7 homes over the last year or two, or you flipped these 12 homes over the last year or two? They're going to have to show proof. So on that HUD, it should have your business name, the dates that you sold it, how much you sold it for, etc. All that should be, they should be able to verify that, right? So just to kind of give you an example, I wanted to kind of show you pretty much what how lenders kind of look at deals and put deals together, right? So let's go ahead and take a look at this. So this right here, this is how we kind of going to put these deals together. Uh, So when you're looking at this, right, this is pretty much a loan worksheet, right? If lenders, this is kind of how they're putting the numbers together. So if you're looking at a deal and you're like, okay, let's say, sorry, let's say we are somebody, we're doing a new construction project, right? So, or let's do fix and flip. So let's say there's somebody bought a property for 240,000. The construction, it says construction, but it can be or renovation, so you can probably put slash. Yeah. So, and let's say it needs $30,000 worth of work, right? So you're in 270. Let's say you could sell it for 350. Okay. So if we head over, let's just go take a look and see. I found a site company already. So all right, so here we are. This is Easy Street Capital. So for fixing flippers, let's take a look at what their rates are, right? Okay, so loan amount up to 9.9 to 11.9, 14.95 doc, up to 70% LTV, 90% LTC. So this is loan to cost and this is loan to value. Points 2 to 3. So we'll probably split that in the middle. Okay, so let's just base this off of you are, they would deem you as an okay borrower, right? So we're going to go back to the worksheet and we're going to put 90. So we're going to put 90%. And then we're going to put 70%. Two and a half. 14.95 is already locked in there. And then what we're going to do is, okay, loan amount is going to be equal to 90%. Okay, so we can't do that because you see here, you're at your LTV, you're already maxed out at 70. So this is 90. So what we'll do is we'll go equals 70% of the ARV. But this looks pretty good. We'll probably take it down because it is a little over. So what we'll do is we'll go ahead and just take it down to 242 should work. Okay, cool. So right here. So in order for them to get this deal done, when they buy it from you, they're going to have to spend $38,000 on this, right? So you're selling the property to them for 240. They're putting $30,000 into it based on this loan, right? We can take it down to let's go 10 and a half. We'll go 10 and a half on the rate. We'll go 10 and a half on the rate. So being at 10 and a half, this is interest only. So when they fully draw their budget, they're going to be paying $2,126 a month into the property sales. At closing, this is how much they're going to pay, right? Based off of if they when they make their first draw. So you having something like this together, you knowing what to get on the side, you being able to explain this deal out, having something like this filled out when you're talking to your end buyers, will give you enough ammunition to go out and fight for them some good terms, right? Also, here and there, you can put your CMA together, and then ultimately you take a look at your ROI, so your return on investment, right? So here we go. Here for something like $30,000, that should be 2 months. You should be in and out in 2 months, right? So based off of that, let's say you in and out in 2 months. So you've done your renovation. It took you 2 months to do it. You have it on the market right here. You look at based on that number, you're going to net profit. It's going to be 35,000, 77% return on your money, which is phenomenal. Really good loan, really solid deal. And then obviously you can see month 5, 6, 7, 8. The numbers kind of go down because you will be making those monthly interest payments, right? So you see all of that stuff there. So that's just something for you to think about when you're putting these deals together and being able to have something like this. So if you want this, you want this loan worksheet, just shoot me an email and I can definitely get this to you for free, no charge. But yeah, that's pretty much all I have for you today. If you have any questions or you want me to touch base on anything specific, please do me a favor, shoot me an email, comment below. I'm here to assist you all in any way that I can. I'm just trying to speak from my experience and help you all get further faster. So if you, like I said, if you have any questions at all, the comment section is open. If you want everything that I use to analyze land deals, if you're looking to, start flipping land to builders, I do have pretty much a package. It's $97 one-time payment, and I'm just going to give you everything from the proper agreements to use, your assignment contracts, this form that I have, this loan worksheet that I have right now, all that stuff is going to be bundled up together for you. And I do have explainer videos on how to fill everything out, how to interact with the title company, pretty much just how to make sure your deal goes from you finding it, speaking to the seller, making a good offer, finding your end buyer, and ultimately getting title open on it, looking at the survey, so that way you can get your deals closed and start scaling. So that's all I have for you today, guys. Hope this helps. Thank you.